Hello everyone, welcome back to my channel Finance Eco India. HDFC Life has just released its Q1 Financial Year 26 results. Profits surged, premiums climbed, and margins stayed strong. I will break them down, compare them with analysts' expectations, share management insights, and help you decide whether to buy, hold, or sell. Let's dive in. But before that, please subscribe to my channel Finance Eco India. So friends, HDFC Life delivered a powerful quarter. Standalone profit jumped 14% year on year, rising from Rs 478 crore to Rs 546 crore, comfortably above street forecasts. Net premium income came in at Rs 14,466 crore, up 16%, exceeding analyst growth project of 10 to 12%. Annual premium equivalent, a key new business matrix, grew approximately 12.5% year on year, boosting the 2-year compounded annual growth rate to 21%. So value of new business or VVN rose 12.7% to Rs 809 crore, with margins holding firm at 25.1%. Assets under management climbed 15% year on year to Rs 3.56 lakh crore, and embedded value reached Rs 58,355 crore, with a rolling return on embedded value of 16.3%. So now let's discuss what management has to give commentary on this. CEO Vaibhav Pathak said, Q1 began on a strong note with healthy top line, higher VNB and stable margins. We outperformed industry growth, gaining 70 basis points overall and 40 basis points in the private sector, reaching 12.1% and 17.5% respectively. She added that over 70% of new customers were first-time buyers, particularly from Tier 2 and Tier 3 markets, highlighting strength in acquisition and distribution. The company expects a gradual shift toward traditional and protection products rather than any sharp swing, emphasizing a stable product mix and disciplined execution. So now let's discuss about the stock reactions and technicals. Ahead of results, HDFC Life sharp price already reflects bullish step up, trading above Rs 740 to 755 support after a 1% pre-open gain. On earnings day, volume increased as market responded positively to the stellar numbers. Analysts from SEBI registered Rohit Mehta suggest that as long as the share price hold above Rs 755, the bullish momentum remains intact, with resistance near Rs 778 to 790. A breakdown below Rs 740 could test Rs 715 to 725. The stock is currently trading around 10.1 times book value with a consolidated pay ratio of 27.4%, key indicator for valuation reference. So friends, now let's discuss what analysts and brokerages had to say about HDFC Life result. So brokerages had forecast 15 to 16% APE growth and around 26% VNB margin. The actual result met or exceeded these estimates. Money Control noted the strong premium growth, rising margin, and reduced regulatory overhead as positive catalyst. Persistency ratio remained robust, 13-month at 86% and 61-month at 64%, reinforcing customer retention. A Reuters report highlighted that group insurance demand remains strong, especially in renewable premiums, while ULIP's low-margin products started to slow, now making up 38% of the product mix. Importantly, VNB margin stability reflects a strategic shift toward higher margin protection and non-par products, showing margin resilience amid shift in product portfolio. So now let's discuss what investors should do. For long-term investors, this is a strong quarter, top line growth, margin resilience and market share gain, Make it a buy or hold at current levels. Watch for any major dips near Rs 755 as accumulation zone. For short-term trader, normal trading strategy is to enter at Rs 755 to 770 with a stop loss around Rs 740. Target resistance lies at Rs 785 to 790. What risks to monitor for this? Any decline in VNB margin from shifting product mix, like higher exposure to group savings or ULIPs. Macro factors such as rate cut, bond yield shifts, or market volatility that could impact investment income. So for long-term upside, continued digital distribution growth and acquisition strength in Tier 2 and 3 markets. Improved persistency and deeper product mix shift, especially in protection and non-par. Now friends, let's summarize. HDFC Life posted an impressive Q1 beat with robust profits, premium growth and a stable margin. The stock is technically strong with upside potential, especially if support level holds. So friends, please like this breakdown, subscribe for more earning analysis and comment below. Are you buying this dip, on dip or holding through the rally? Thank you. Jai Hind.